Right now, there are hidden Medicare Part B costs heading your way in 2026. Most seniors have no idea these charges are coming until it's too late. I'm talking about surcharges, penalties, and fees that can quietly drain hundreds from your budget. If you rely on Medicare, you need to hear every word of this video. These aren't the headline numbers you see on the evening news. These are the buried costs that Medicare doesn't exactly advertise to you. They're tucked inside notices, buried in fine print, and triggered by rules most people never learned. By the end of this video, you'll know exactly what they are and how to protect yourself. I've spent over 30 years helping folks just like you plan for retirement. In all that time, the number one problem I see is surprise costs that seniors never saw coming. Today I'm going to pull back the curtain on every hidden Part B expense for 2026. Stick with me, because one tip near the end could save you over $1,000 this year. Let's start with the basics so we're all on the same page together. Medicare Part B covers your outpatient care, doctor visits, lab work, and certain preventive services. According to CMS.gov, the standard Part B premium for 2025 is $185 per month. For 2026, projections from the Medicare Trustees Report suggest that number is climbing even higher. Think of Medicare Part B like a subscription you pay for medical coverage. Every month, that premium gets deducted right from your Social Security check before you ever see it. But the premium itself is only the beginning of what Part B actually costs you. There are deductibles, co-insurance charges, and income-based surcharges stacked on top. Here's an analogy that makes this real for everyday life. Imagine your cable bill says $40 a month on the advertisement you see. But then you get hit with equipment fees, broadcast fees, and regional sports surcharges. By the time you open the bill, it's $80 instead of the $40 you expected. That's exactly what happens with Medicare Part B for millions of American seniors. The advertised premium is just the starting point of your actual total cost. CMS data shows the average Part B enrollee pays significantly more than the standard premium alone. When you add deductibles, coinsurance, and surcharges, the true annual cost can shock you. The reason most seniors don't see this coming is simple, and it's not your fault. Medicare's cost structure is deliberately spread across multiple billing mechanisms throughout the year. Some costs hit monthly through your Social Security deduction automatically every single month. Others surprise you at the doctor's office or show up on your explanation of benefits weeks later. Now let's dig into the first major hidden cost you need to understand for 2026. I'm talking about the Part B annual deductible, which most seniors underestimate significantly. For 2025, the Part B deductible is $257 according to CMS.gov official published figures. Based on historical trends, the 2026 deductible is projected to rise to approximately $265 or more. That deductible means you pay the first $265 out of your own pocket every single year. Only after you've met that deductible does Medicare start covering its share of costs. For someone on a tight fixed income, that's a real hit right at the start of the year. And here's the part that catches people off guard about how it actually works. The Part B deductible resets every January 1st without any exception whatsoever. So if you had a doctor visit in late December and met your 2025 deductible already, tough luck. Come January, you're starting over from zero and paying full price again for your visits. This is why many seniors feel like they can never get ahead with their healthcare expenses. But the deductible is honestly just the warm-up for the bigger hidden cost ahead. After you meet your deductible, you still owe 20% of every Medicare-approved service you receive. That 20% coinsurance has no annual cap under original Medicare Part B at all. Read that sentence again because it's one of the most dangerous gaps in Medicare coverage today. Let me show you what that means with real dollar amounts you can relate to. Say you need an outpatient surgery that Medicare approves at $15,000 total for the procedure. Your 20% coinsurance on that bill comes to $3 out of your pocket directly. There is no maximum out-of-pocket limit in Medicare to protect you from that. Compare that to most private insurance plans that cap your annual out-of-pocket spending for you. Under those plans, once you hit maybe $8,000, you're done paying for the rest of that year. Medicare Part B gives you no such safety net. and many seniors don't realize this critical fact. This is precisely why Medigap supplemental plans exist, but those come with their own additional costs. A popular Medigap Plan G policy can cost you anywhere from $150 to $300 per month on average. That's $800 to $600 per year on top of your Part B premium for supplemental coverage. So when you add your Part B premium, your deductible, and your Medigap premium together, the numbers add up fast. For 2026, a senior on Plan G could easily pay over $5,000 annually just for Part B-related coverage. If you chose a Medicare Advantage plan instead, you might dodge the Medigap premium cost entirely. But Advantage plans come with their own copays, network restrictions, and prior authorization requirements you must follow. According to CMS.gov, the average Medicare Advantage enrollee still pays $1,200 to $2,500 in annual out-of-pocket costs. Neither option is free, and the hidden costs show up differently depending on which path you chose. Here's another Part B cost that sneaks up on seniors every single year without warning. Medicare Part B covers durable medical equipment like wheelchairs, oxygen equipment, and walkers for you. But you still owe that 20% coinsurance on every piece of approved medical equipment. A power wheelchair approved at $4,000 means you're paying $800 out of your own pocket for it. Many seniors assume Medicare covers all medically necessary equipment at 100% of cost. That assumption is incorrect, and it leads to billing surprises that can wreck a monthly budget. Always ask your equipment supplier for a written cost estimate before you agree to receive anything. That one simple step can save you from a devastating surprise bill arriving in your mailbox. Mental health services under Part B carry their own hidden cost structure you should know about. Medicare Part B covers outpatient mental health visits, but you still owe the 20% coinsurance amount. For seniors dealing with depression, anxiety, or grief counseling, those copays add up over many sessions. A weekly therapy session at $200 per visit means $40 per week out of your pocket in coinsurance. Stay with me, because what I am about to show you will surprise you significantly. The next hidden Part B cost is the one that angers seniors more than any other cost. It's called IRMAA, the income-related monthly adjustment amount that Medicare charges you. And it can add hundreds of dollars per month to your Part B premium based on your income. IRMAA is a surcharge that higher-income seniors pay on top of the standard Part B premium. The government uses your tax return from 2 years ago to determine your IRMAA bracket. For 2026, that means Medicare is looking at your 2024 tax return to set your premium. If your modified adjusted gross income exceeded certain thresholds, you're paying significantly more than the standard amount. Let me walk you through the actual 2025 IRMAA brackets so you understand this clearly. According to CMS.gov, if you're single and your income was above $106,000, IRMAA kicks in immediately. At that first tier, you'd pay $259.10 per month instead of the standard $185 freemium amount. That's an extra $74.50 every single month just because you crossed an income line. But it gets much worse at higher income levels that many retirees unexpectedly reach. If your income was above $133, $506,000, your Part B premium jumps to $350.59 per month for Part B. These are real numbers published on CMS.gov that apply to real American seniors right now. Here's where the hidden trap lies with IRMAA and why it catches so many seniors unprepared. Many retirees sell a home, cash out an investment, or convert a traditional IRA to a Roth account. That one-time income spike in a single year can push you into a higher IRMAA bracket unexpectedly. 2 years later, you open your Medicare notice and discover your premium has doubled or even tripled. I've seen this happen to clients who sold a family home after decades of property appreciation. IRMAA surcharge level. Their combined Part B premiums jumped by over $800 per month for that entire surcharge year. That's nearly $10 in extra Medicare costs they never planned for in their retirement budget. The cruel part is that IRMAA looks backward 2 years and doesn't consider your current situation. You might have had high income in 2024 but be living on Social Security alone right now. Medicare doesn't care about your current financial reality when it sets your IRMA-A surcharge amount. It only looks at that tax return from 2 years prior to determine what you owe. Now, there is a way to appeal IRMA-A if you've had a qualifying life-changing event happen. Events like retirement, divorce, death of a spouse, or loss of income-producing property can qualify you. You'd file SSA Form SSA-44, which is called the Medicare Income-Related Monthly Adjustment Amount Reconsideration. This form lets Social Security use your current income instead of the 2-year-old tax return figure. But here's the catch that most seniors never hear about regarding the IRMA-A appeal process. You must proactively file that form yourself because nobody at Medicare will remind you to do it. If you don't file SSA 44, you'll pay the higher premium for the entire year without any adjustment. I've seen seniors lose thousands of dollars simply because they didn't know this form even existed at all. Let me give you a specific example of how filing SSA 44 can save you real significant money. Suppose you retired in 2024 and your last working year income was $160,000 on your return. Without filing SSA 44, Medicare would charge you the second IRMA tier for all of 2026. That could cost you an extra $185 per month, or $220 per year in unnecessary premium surcharges. Now here is the part most seniors never hear about regarding Part B costs in 2026. There are Part B costs hiding inside services you thought were completely free under your Medicare coverage. Medicare promotes certain preventive services as covered at 100% with no cost to you. But the reality is far more complicated than that simple promise suggests for most seniors. Here's how this works in practice at your doctor's office during a real visit. You go in for your free annual wellness visit, which Medicare does cover at no cost to you. But during that visit, your doctor notices something concerning and orders a diagnostic test immediately. That diagnostic test is not preventive anymore, and now you owe the 20% coinsurance on it. This happens to thousands of seniors every single year, and the bills surprise them every time. Your free wellness visit turns into a $200-300 bill because of additional services your doctor provided. The doctor was doing the right thing medically, but Medicare draws a hard line between preventive and diagnostic. You need to understand that line exists so you can ask questions before tests are ordered. Another hidden cost area is Medicare Part B's coverage of certain prescription drugs for your treatment. Most people think Part D covers all prescriptions, but Part B covers some drugs administered by doctors. These include chemotherapy drugs, certain injectable medications, and some infusion therapies you may need. The catch is, you still owe the 20% coinsurance on these Part B drugs every single time. A single chemotherapy infusion can cost $10,000 or more under Part B's approved payment amount. Your 20% share of that comes to $2,000 for just one treatment session alone. Over a course of 6 treatments, you could owe $12,000 in coinsurance for Part B drugs only. Without supplemental coverage, these costs can be absolutely devastating to a senior's financial situation. Ambulance services are another Part B cost that catches seniors completely off guard at the worst time. Medicare Part B covers ambulance transportation when it's medically necessary for your condition and treatment. But you still owe the 20% coinsurance after meeting your deductible for the service. A single ambulance ride can cost $2,000 or more, leaving you with a $400 coinsurance bill unexpectedly. Many seniors also don't realize that Medicare Part B only covers ambulance transport to the nearest facility. If you request transport to a hospital further away that isn't the closest appropriate facility available, you may owe even more. Non-emergency Medicare. Always verify coverage before non-emergency transport to avoid surprise bills that can reach into the thousands. Let's talk about Part B's coverage of outpatient hospital services, which hides another significant cost. When you receive care in a hospital's outpatient department, the facility charges a separate facility fee. This facility fee can be significantly higher than the same service performed in a regular doctor's office. You owe 20% of that inflated facility fee, which means your coinsurance is much higher at hospitals. For example, A simple MRI at a freestanding imaging center might cost Medicare $500 as the approved amount. The same MRI at a hospital outpatient department might be approved at $1, $200, or even more. Your 20% coinsurance on the freestanding center MRI would be $100 out of your pocket. But at the hospital outpatient department, that same coinsurance jumps to $240 or more for identical imaging. This is why where you get your care matters enormously for your Medicare Part B costs. Always ask your doctor if a procedure can be done at a freestanding facility instead of a hospital setting. That one question alone could save you hundreds of dollars on a single procedure or test. Most doctors are happy to accommodate this request if they have privileges at freestanding centers nearby. Now let's address the Part B late enrollment penalty, which is the cruelest hidden cost of all. If you didn't sign up for Part B when you were first eligible and didn't have qualifying employer coverage, you face a penalty. The penalty is 10% of the standard premium for every 12-month period you could have had Part B. And here's the devastating part that makes this penalty truly financially harmful to seniors. That penalty is permanent and lasts for as long as you have Medicare Part B coverage. It never goes away, and it gets applied to your premium every single month for life. If you delayed enrollment by 3 years without qualifying coverage, your penalty is 30% permanently added. On the projected 2026 standard premium, that could mean an extra $57 or more every month forever. Over a 20-year retirement, a 30% late enrollment penalty could cost you over $13,000 in total. That's $13,000 in extra premiums you'd never have to pay if you'd enrolled on time initially. Many seniors made this mistake because they didn't understand the enrollment rules when they first turned 65. If you're currently paying a late enrollment penalty, unfortunately there is no way to remove it. However, there are limited circumstances where you might be able to reduce or avoid the Part B penalty. If you had creditable employer coverage through your own or a spouse's current employment after age 65, you qualify. You'd use a special enrollment period to sign up for Part B without any penalty being applied. The key word is current employment, meaning someone must have been actively working while you had that coverage. Ranger nalter in mind while sort of U5 to as Sol. COBRA coverage does not count as current employer coverage for avoiding the Part B late enrollment penalty. Retiree health benefits also do not count as qualifying coverage to avoid the Part B penalty assessment. These are two of the most common and costly misunderstandings I've seen in my entire career advising seniors. If you're relying on COBRA or retiree benefits, you should enroll in Part B immediately to stop the penalty. Now let me share the hidden gem that could save you real money on your Part B costs this year. There is a program called the Medicare Savings Program that most eligible seniors never apply for at all. According to CMS.gov, these state-run programs can pay your Part B premium for you completely in full. Depending on your income level, you could qualify and save over $2,000 per year on Part B costs. The Medicare Savings Program has 4 different levels based on your income and financial resources. The Qualified Medicare Beneficiary Program, known as QMB, covers your Part B premium, deductibles, and coinsurance entirely. The Specified Low-Income Medicare Beneficiary Program, known as SLMB, pays your Part B premium in full. The Qualifying Individual Program, called QI, also pays your full Part B premium for qualifying seniors. For 2025, the QMB income limit for a single person is approximately $275 per month total. The SLMB limit increased slightly for 2026 based on federal poverty level adjustments coming soon. If your monthly income falls below these thresholds, you could have your entire Part B premium covered. Here's what makes this a true hidden gem that most seniors completely miss out on. According to Medicare.gov, millions of seniors who qualify for these programs never apply for the benefits available. Many don't know the programs exist because Medicare doesn't actively promote them to eligible beneficiaries. Others assume they won't qualify. But the income limits are higher than most people expect them to be. If you qualify for QMB specifically, you get an extraordinary additional benefit beyond just premium coverage. QMB status protects you from all Medicare cost sharing, including deductibles and coinsurance charges entirely. Doctors and hospitals are legally prohibited from billing QMB beneficiaries for coinsurance or deductible amounts. This means your entire Part B cost could be reduced to $0 if you qualify for this program. Now let me give you the exact action steps you need to take today to protect your finances. First, go to Medicare.gov and look up your current Part B costs, including any RMAA surcharge you're paying. If you've had a life-changing event that reduced your income, download Form SSA 44 from SSA.gov immediately. Call Social Security at 1-800-772-1213 to discuss filing that form and reducing your RMAA surcharge. Second, contact your state health insurance assistance program, known as SHIP, for free personalized counseling help. You can find your local SHIP program by visiting shiphelp.org or calling 1-877-839-2675 right now today. A SHIP counselor can review your income and determine if you qualify for a Medicare savings program. They can also help you apply, and this service is completely free to every Medicare beneficiary. Third, review every Medicare summary. Notice you receive for accuracy and potential billing errors on your account. According to CMS.gov, Medicare billing errors are more common than most seniors realize in their statements. If you see a charge that looks wrong, call 1-800-MEDICARE, which is 1-800-633-4227 to dispute it. The deadline to appeal a Medicare claim is generally 120 days from the date on your notice. Let me recap the most important thing I shared with you in this entire video today. The hidden costs of Medicare Part B in 2026 go far beyond the standard monthly premium amount you see. Between RMAA surcharges, the 20% coinsurance with no annual cap, late enrollment penalties, and facility fee differences, your true Part B cost could be thousands more than you expected this year. But programs like the Medicare Savings Program and RMAA appeals through Form SSA 44 can dramatically reduce what you actually owe. If this video helped you understand your Medicare costs better, please hit that subscribe button right now. I release new videos every week covering the exact benefits and rules that affect your retirement finances. Next week, I'm covering a Medicare Part D change for 2026 that could save you hundreds on prescriptions. This channel is for educational purposes only and does not constitute financial or legal advice. Always verify directly with SSA.gov or Medicare.gov. You name